How to Start Investing for Beginners, Step-by-Step Guide. Are you feeling overwhelmed by the world of investing? Do terms like stocks, ETFs, and crypto leave you feeling lost and confused? It's a common feeling. Many people are intimidated by financial jargon and unsure where to begin. Welcome to Online Investment Canvas, where we simplify complex financial topics into actionable steps you can take today. We believe everyone deserves to feel empowered to take control of their financial future. Investing shouldn't be a mystery. In this video, we'll demystify the investing process and provide you with a clear, step-by-step plan to get started. You'll learn the basics and feel confident taking your first step. We'll cover everything from defining your financial goals to making your first investments. By the end, you'll understand basic investment options and how to choose the right ones for you. We'll walk you through the process, ensuring you feel confident and prepared to begin your investing journey. We'll cover everything from setting goals to making your first investment. And stick around until the end because we'll share a bonus tip to help you avoid common beginner mistakes. The first and most crucial step is defining your financial goals. Why are you investing in the first place? Are you saving for retirement? Perhaps a down payment on a house? Or maybe you want to fund your children's education? Write down your goals and attach a timeline to each. This will provide clarity and direction for your investment strategy. Your goals directly influence your risk tolerance and the types of investments you choose. A longer timeline allows for more aggressive investments. Before investing, it's essential to assess your current financial situation. This means taking a hard look at your income, expenses, and debts. Prioritize paying off high-interest debt, such as credit card debt, before you start investing. The interest you pay on these debts can significantly hinder your investment growth. It's also crucial to build an emergency fund. Aim for 3 to 6 months' worth of living expenses in a readily accessible savings account. Now, let's talk about choosing the right investment account. Several options are available, each with its own advantages and disadvantages. Consider options like a 401k through your employer, an individual retirement account, IRA, or a taxable brokerage account. Each offers different tax benefits and investment options. Research different brokers based on their fees, investment options, and user-friendliness. Look for platforms that offer educational resources and excellent customer support. Understanding the basic investment options is crucial. Let's break down some common choices: stocks, bonds, mutual funds, and ETFs. Stocks represent ownership in a company. Bonds are loans you make to a company or government. Mutual funds are baskets of stocks or bonds managed by a professional. ETFs, or exchange-traded funds, are similar to mutual funds, but trade like stocks. For beginners, we recommend starting with ETFs that track a broad market index, such as the S&P 500. These offer instant diversification and are relatively low cost. Determining your risk tolerance is a critical step. How comfortable are you with the possibility of losing money in the short term? Your risk tolerance will influence the types of investments you choose. If you're risk-averse, you might prefer bonds or conservative mutual funds. Your age and time horizon also play a significant role. Younger investors with a longer time horizon can typically afford to take on more risk. Don't feel pressured to invest large sums of money right away. Start small and gradually increase your contributions over time. Set up automatic monthly contributions to your investment account. This helps you stay consistent and avoid the temptation to time the market. Automating your investments also takes the emotion out of the equation. You're less likely to make impulsive decisions based on market fluctuations. Investing is a continuous learning journey. Stay informed about market trends, economic news, and different investment strategies. Read books, watch videos, and follow reputable financial news sources. The more you learn, the better equipped you'll be to make informed decisions. Consider taking online courses or attending workshops to deepen your understanding of investing. Knowledge is power when it comes to managing your finances. Diversification is key to managing risk. Don't put all your eggs in one basket. Spread your investments across different asset classes, such as stocks, bonds, and real estate. This helps to mitigate losses if one investment performs poorly. Within each asset class, diversify further. For example, invest in stocks from different industries and geographic. Over time, your asset allocation will shift as different investments grow at different rates. This is why it's important to rebalance your portfolio periodically. Rebalancing involves selling some of your overperforming assets and buying more of your underperforming assets. This helps to maintain your desired asset allocation. Aim to rebalance your portfolio at least annually or more frequently if your asset allocation deviates significantly from your target. Investing is a long-term game. It's not about getting rich quick. Avoid panic selling during market downturns. Remember that market fluctuations are a normal part of the investing process. Focus on the power of compounding. Over time, even small investments can grow significantly thanks to the magic of compound interest. One of the biggest mistakes beginners make is trying to time the market. Don't try to predict when the market will go up or down. Instead, focus on long-term goals and consistent investing. Dollar cost averaging, as we discussed earlier, is a great way to avoid this pitfall. Remember, investing is a marathon, not a sprint. Stay focused on your long-term goals and avoid making impulsive decisions based on short-term market fluctuations. Let's recap the steps we've covered today. First, define your financial goals. Next, assess your financial situation and build an emergency fund. Then, choose the right investment account and understand basic investment options. Determine your risk tolerance, start small, and automate your investments. Remember to research and learn continuously. Diversify your portfolio and rebalance periodically. Finally, stay disciplined and patient. Investing is a long-term journey and building wealth takes time. If you found this video helpful, please give it a like. Subscribe to our channel for more investing tips and strategies. Share this video with anyone who wants to start investing but feels overwhelmed. Your support helps us reach more people. What are your biggest investing questions? Leave a comment below and we'll do our best to answer them. We hope this video has empowered you to take control of your financial future. Remember, investing is a journey, not a destination. Keep learning, stay disciplined, and you'll be well on your way to achieving your financial goals. We'll see you in the next video.